Most traders use volume the wrong way. They look at volume bars below the chart and try to guess what's happening. They see spikes and assume strength. They see low volume and assume weakness. But that doesn't tell you where the real trading activity actually happened. Because volume by itself doesn't show you which price levels mattered the most. And that's the problem. You might know that a lot of volume happened, but you don't know where buyers and sellers were actually active inside the move. That's why many traders struggle to understand where price is likely to react, because they're missing the most important part, how volume is distributed across price. The tool we're looking at today solves that in a very visual way. Instead of just showing volume as bars, it maps volume directly onto the chart and shows you exactly where the market spent the most time trading. Let me show you exactly what that looks like. Open TradingView and load any chart you want. I'm using the 15-minute time frame here, but this works on any market, forex, crypto, stocks, or commodities. Once the tool is applied, you'll immediately notice a volume structure built directly on the chart. But instead of a flat histogram on the side, this one has a layered, almost depth-like appearance. It extends outward from the price levels, creating a 3D-style visualization of volume distribution. Each horizontal section represents how much trading activity occurred at that price. Thicker areas mean more volume. Thinner areas mean less volume. This makes it very easy to see where the market concentrated its activity and where price moved quickly. Look closely at the structure. You'll notice that certain price levels stand out more than others. These are areas where the volume is significantly higher. This is where the market spent more time trading, and where both buyers and sellers were active. These levels often act as important zones because they represent areas of agreement. When price returns to these levels, reactions are common. You'll also notice thinner areas where volume is much lower. These zones represent prices where the market moved quickly without much resistance. When price enters these low volume areas again, it often moves through them quickly. That's because there was no strong participation there previously. Another important element you'll notice is a highlighted level within the profile. This is the point of control, or POC. The POC represents the price level where the most volume occurred. It's essentially the market's most accepted price. When price moves away from this level and later returns, it often reacts, because many traders previously executed orders there. That makes it a key reference point for both entries and exits. You may also see a surrounding range that captures the majority of the volume. This is known as the value area. It shows where most of the trading activity took place. When price is inside this area, the market is usually balanced. When price moves outside of it, that's when you start seeing expansion and stronger moves. Now, before we get into the actual strategy, let me share something that changed how I trade. You can learn this setup perfectly, but if you're not at your screen when it triggers, you miss it. And that used to happen to me constantly. That's why I started automating strategies like this, back-tested setups that run whether I'm at my desk or not. These work across forex, futures, gold, and they even work at prop firms. If you want access to the exact strategies hundreds of traders are already using, check the first link in the description. Before we go into strategies, let's quickly look at the settings. Open the settings panel. You'll typically see controls for profile resolution. This determines how detailed the volume distribution appears. Higher resolution gives you more precise levels, but can make the chart look busy. Lower resolution simplifies the structure and highlights only the major zones. You'll also see options related to the depth or visual intensity of the profile. This controls how far the volume extends visually from the chart. It doesn't change the data, only how it looks. Once everything looks clean, click OK. Now let's go into how traders actually use this. Long setup. First, identify a strong high volume area below the current price. This is usually where the profile is thick and clearly visible. Now wait for price to retrace back into that zone. As price enters the area, watch how it behaves. If price slows down and starts forming bullish candles, that suggests buyers are stepping in again. A common entry is when price rejects the lower part of the high volume area and starts moving upward. Stops are typically placed below the zone. Targets can include previous highs or the next resistance level above. Short setup. For shorts, look for a strong high volume area above the current price. Wait for price to move up into that zone. If price begins to stall or reject that level with bearish candles, that suggests sellers are active again. Enter short on confirmation. Stops go above the zone. Targets can be the next support level or previous lows. If you're a serious trader trying to get funded, you need more than a single tool. You need a full toolkit consisting of elite algos that catch the best moves while avoiding losses in sideways markets. Proven strategies across multiple markets, whether forex, gold, or futures, with a risk management built in, and fully automated systems so you can trade without being at the screen all day. So if you'd like to stop burning your time and account testing random indicators and start using elite tools and automation like all these other traders, click the link below. Different markets behave behave slightly differently. In forex, volume distribution helps identify strong support and resistance zones. In crypto, the structure can shift quickly, so focus on larger volume areas. In stocks, volume profiles often align with institutional activity. In gold, high volume zones often act as precise reaction points. Now, if you want to use this tool yourself, the indicator shown in this video is called Volume Profile 3D, created by Zierman. You can find it directly in TradingView by searching for it in the indicators menu. Thanks for watching, and I'll see you in the next one.